Welcome to Dragonfly Trading. Hope everybody's having a wonderful Sunday. My name is Carrie and I'm a full-time Elliott Wave trader in the crypto and Forex markets. Today's video is going to be on Bitcoin. Like I say in all my videos, I feel whatever Bitcoin decides to do here, the alts will follow. If you do have an alt request, put it in the comments and I will add it to my next video. Remember, this is not financial advice. This is just the way that I see the market. Our Discord is soon to open. We are working very hard to do that. If you are interested, there is an email in the description below. Send your interest. We are running out of spots, so I would get on the list if you want to be a part of this. So today I'm going to give a little hopium. With the correction we're having, people are forgetting the big picture here. So this is the BLX chart, and it's got the most data pretty much, okay? And when you pull a fib extension from the all-time high in 2011 to the low that we had, you can see that the last correction that we had before this blow-off top came to the 1.618. which is typical of a third wave inside of a bull run. The all-time high came to the 2.236, which is typical of a fifth wave. Beautiful, perfect. Again, when you pull a fib extension from the all-time high to the low that we had in the bear market, the last correction that we had before the blow-off top hit the 1.618. The blow-off top overran the 2.236 by just a little bit, which is typical, and blow-off tops. Now, when you pull the fib extension from the all-time high to this low, the 1.618 is sitting right at this top we had. If we get another leg up, like we have in the past here, we're looking at somewhere around 204,000, and that's depending on if I have this pulled, to the tick. But that's what we're looking at, that kind of price level, okay? Here's where things get a little iffy. If you pull a fib extension from this high, which I know it's not an all-time high, but I pulled it just for the sake of pulling it, okay? To the low, we had this little correction here that hit the 1.618, and the top of this hit the 2.236. Interesting, huh? Let me know in the comments what you think about that. Whether we should take that into consideration, which I am definitely taking it into consideration. Just what you think about it, okay? If we are at the end here, and that is very significant because this correction was longer and more significant than any one that we had in the past. And I've said this before in my videos about what I think might be happening if that's the case. 1 second. Apologize for that interruption. I had to yell at my rabbit. She was chewing my computer cord. Okay. So say this is the top. What do I think? Well, what I think is this was a lower degree third. What actually happened was this was all a fourth. And it went with that 3. This was a 5. Which would make this a higher degree third. Okay? Ugly circle, but it is what it is, okay? And I think what is happening is this is going to get drawn out. It's going to look something like a bear market, and this would be the 4 that goes with this third. And I don't feel that we would ever break through all of this support that we have here. Okay? I don't feel that would ever happen. That's my alternative if this is a top here. But I'm not leaning that way, guys, until we come into this wave one. Okay? So let me know in the comments what you think about that. All right, let's go over to the other chart. So I am on the 2-week chart. We always skip from the month down to the week. But, you know, there's some intervals in between there, like the 2-week, okay? And I wanted to show you that when we had this initial correction and we moved to the upside, we got rejected right on that 60 mark, which is the bullish resistance. Okay, above 60 is all your bullish zone. Right here, again, we got rejected at the 60, which is significant, yes, but it doesn't mean that we're going to plunge into the abyss. What it means is what we really need to do here is hold in this green zone and not break down into below 40. Okay? Same with the weekly. Weekly chart. When this comes down, if it does come down more, I want to see it hold 40. Because over here, when we were trying to rally out of here, we were holding 40. It was when we broke through 40 that we had this capitulation, bigger correction, whatever you want to call it. Okay? Again, over here, we broke through 40. We had a bigger correction. So if we can hold 40 like we did back here, that's going to be very good. And especially if we come down and break this bottom, if we hold 40, that's going to create some serious bullish divergence, and that's what we need. Moving down to the daily. Okay, we'll go ahead and talk about the RSI because we're already there. We have some pretty good bullish divergence between these 2 points, but we're getting rejected lower and lower on the upper side. If we want to get out of this, we need to get above 50 and find support on it and rally up. That's what needs to happen. If we come down and we break this low right here, but RSI does not break it, we're going to have bullish divergence. That's what we need, guys. We need the type of divergence that's called reversal divergence. And that would be divergence between this point and a point that may come down here. Let's talk about this part right here. I've talked about all of this so many times in my videos. I've talked about how I don't like this bottom. If it is a bottom, I don't like it at all. The video where I talk about it in great detail and dig into it is in the description below. You can take a look at that one. But somehow, if we did bottom here, the bullish case is that what we've created here is a leading diagonal. And it would be considered an A wave or a wave 1. And I'm going to try to make this as less confusing as possible. So for the bullish case, we need to correct down correctively, meaning that we need to make ABCs down, which would mean this would be A, B, C. We have an A, B, C in the middle, and then we need to make an A, some type of B that could come up higher, and then a C. Okay, we could even make more of them, but here's the key. We cannot break this bottom right here for the bull scenario. We'll put the red line of death in there, like Jim of All Trades always says. Red line of death for the bull scenario. Now, as we go along, of course, this can't get extended out all the way over here because that would be out of time, which we can get into that when it happens. But what I'm saying is this is what needs to happen. We need to channel downward in a corrective manner of ABCs, which creates WXY basically. Okay? This is what needs to happen. We need to channel downwards correctively. And this is the way that it would happen for the bull scenario. The bear scenario, but not really bear scenario, is that we have a 3-wave that was an expanded flat. We've created a 3-wave. And then we have a couple things we can do here. It's either 3 or 5, guys. That's it. 3 or 5 that can come down. So we're going to do 5. And it could come down very deep and hit this last support here. That's as far as I want that to go if it's going to do that. I don't want it to break this support. It can fill all these gaps, come down that far, but I don't want to see it break that support that's sitting at 17,600. If we get down there, we need a 5-wave impulsive move to get us out of here. Nothing else. That's really the synopsis of it. If this is a 5-wave move, it's the same exact thing, guys. Okay, this was 3 up. We would make 5 down, and I don't want to see us break that last resistance. We have the triangle option. Okay. They need to be all 3s. So we would have to assume this is an A, a B, a C. A, B, C back up. This leading diagonal needs to happen to create our A. We'd get a B, then a C. Then we'd get another one, and then another one. Okay, that gives you the A, B, C, D, and then E doesn't have to come to the trend line, or it can come to the trend line. Then, what do we need? 5 waves, guys. Always 5 waves gets us out of here. Okay. Talked about some other corrections that can break the high. How do we get there? Well, we would need to channel down in that corrective manner. We channel down in the corrective manner. This is 3. We make 3. We don't break the low. And then we go up. And we get up into the expanded B pocket. Then this partner leg partners with this one. And we either create a running flat that does not break the low or an expanded flat that breaks the low. So pretty much every correction that can happen up here is still on the table, guys. It's still on the table. So let's dig into this a little bit and take a closer look at it. So we have the leading diagonal option where this is creating a 1, 2, 3, 4, 5. It might take a little bit different form where this 4 might end up over here, 5 like that, but this is the shape that it takes. When it's done, you will get a pop to the upside and it will break out of it. Some people call these falling wedges. Okay, but that would lead to more downside. It would lead, this would be an A wave or a wave 1. The way that I'm leaning right now is that what we're creating is a 1, 2, 1, 2. If we break over 45, 170, less probability that this is a 1, 2, 1, 2. Complete invalidation is breaking over 48, 800. The reason I say that it's less probability if we break over this is because this too can be moved up higher and over a little bit. But I'd rather see it not do that. Okay? If you don't understand what a 1, 2, 1, 2 is and why I'm leaning this way so much, a 1, 2, 1, 2, and I'll do it to the upside because it's easier to see. You get your initial 5-wave move. Inside your third, you have 5 waves. You get your first wave 1. The second 2 finds support on top of your first wave 1. Then you get 3, 4, and 5 for this inner third. As you can see, this 2 found support or resistance in a downtrend right in the candle closes of this wave 1. That's why it so much looks like a 1, 2, 1, 2 to me. But if we break over these highs, then we'll have to reassess, pretty much. The other option that we have available to us is correcting down correctively. Now, there's a couple of ways that you can look at it of how it's doing that. The first way is that we created an expanded flat right here. We had an ABC to the upside, and now we're creating ABC to the downside. That would create a WXY. If we continue to ABC us to death, the WXY just gets bigger and a higher degree. But the key for the bull scenario is that we don't break this low. Right here. Sitting at 29,280. This low right here. We don't want to break that for this to be the bull scenario. I usually don't go down to the very lower time frames, but I will today. Let's go down here and take a look at this current move. Okay, posted a Loom video in Instagram yesterday, and I said in the Loom video that we had this move to the upside and we needed a partner for it. So right now I'm looking at this move as being a flat, a 3-wave to the upside, 3-wave to the downside, and this is creating a C wave that probably has another hit to the high. If we break up over the 1.618 and this resistance and break this high here, then I'm going to have to reassess and look at this count. And basically, I will be leaning more towards that we're correcting downwards correctively, like I talked about with the WXY. Really don't want to see us break this high. Will it take the 1212 completely off the table? No, but it would make it less probable. Okay? So I hope you enjoyed this video. I hope it brought you some clarity. Let me know in the comments, and I hope everybody has a wonderful Sunday.